You've got to know what your investors are looking for because you are like an ambassador for them. You're like a representative for your investor group. So you've got to know what they want so you can go out in the world and find that thing. And once you find that thing, if you've nailed it, I guarantee when you go back to your investor group, they're going to say, that's exactly what I'm looking for. I'm totally in.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome everybody to today's Capital Raising Show. I'm your host, Tim Mai, and I have an amazing guest on the line with us today, Annie Dickerson with Good Egg Investments. I'm going to read her bio for you here, but it's so impressive. As I got to know Annie and her team more, they're doing amazing stuff. Annie,
stop it, Tim. You're making me blush over here.
Yeah, so Annie is an award-winning real estate investing expert with 15 plus years of real estate investing experience. In 2022, Annie was named Real Estate Investor of the Year by the Motley Fool. Annie and her business partner, Julie Lamb, are founders of Good Egg Investments, which was named Best Real Estate Syndication Company in North America in 2020. Together, they have helped thousands of investors around the country to invest in commercial real estate assets totaling over $1 billion. Annie and Julie are authors of the book Investing for Good, hosts of the Life and Money Show podcast, and creators of the Real Estate Accelerator, an elite mentorship program designed to help people learn to raise private capital for real estate investments. So with that, everyone, let's give Annie a big welcome. Yay!
I'm thrilled to be here with all of you.
Awesome. All right. I am super excited to hear your story. And, you guys have been growing so much so fast. As I put the words out for the type of guests that we want to have on this show to interview, you came very highly recommended, and so I'm super excited. So Annie, if you can share with us a little bit about your, I guess, how you got started in this business and what made you decide to get into this business.
Oh my, yeah. Well, the first thing you should know about me is I never intended to get into this business. Hearing some of your stories, you have a very intentional path, and I definitely applaud you for that. You were leaps and bounds ahead of where I started because I came into this business screaming and kicking. I was like, nope, not going into real estate. And so actually I started my career as a fourth grade teacher with Teach for America, big plans to close the achievement gap, opportunity gap. And after a couple of years as a teacher, I wanted to make a bigger impact. Impact was the common theme throughout my story. So then I went from teaching and to game design. I wanted to make educational games for kids. And so did that for a few years, and then moved down to the Bay Area where we are now to get into adult learning and development. So taking that game design experience and infusing it into creating trainings for companies like Google and Facebook and whatnot. And real estate was never on my radar, never. In fact, when we moved to the Bay Area, my husband became a real estate agent, which he still is now. And as soon as he did that, I said, well, crossing real estate off my list. We can't both be in real estate. We can't be that couple. So I'm like, okay, you do your thing, do your real estate thing. I'm going to focus on climbing the corporate ladder over here. And, so he did, and his business started to grow. And I, a couple years in, he was like, hey, could you, maybe on the side, maybe you can help me with my business. I was working as a creative director at the time. He was like, maybe you can do some design work, marketing, that kind of stuff. At the time, I knew nothing about any of that. And I was like, I'm really busy with my job here. I don't really have time, but maybe I'll read a book. And in the process of doing so, I looked at his website, and I was like, this is within my wheelhouse. So in the process of redesigning his whole website, what happened? I fell in love with real estate, but not what he does through selling residential real estate, but really the small multifamily. And so I thought, I'm going to quit my job and we'll just buy a whole bunch of these small multifamily homes and I'll be set. I can retire for life and I don't have to do anything else. And that was my plan. And, I got obsessed with it. Every time we got together with friends, they'd ask, Annie, what are you up to? How are you doing? It was all I could talk about. I'm like, check out this market. I'm looking at this property. You guys know, right? When you have that bug, you have that passion, it just spills out. And so I was talking to everybody I could about it. And every time they were like, oh my gosh, this is amazing. Teach me how to do it too. I want to learn. And I'm like, great, I'll teach you everything I know. Pull up a chair. And I'm like, okay, here's how you do it. And I start going through you guys know all the steps, right? You gotta research the market. You gotta get in touch with brokers. You gotta look at the properties. You gotta underwrite. You gotta do all this stuff. And 2 or 3 steps in, without fail, every person's eyes started to glaze over. They were like, wait. No. You misunderstood. I don't want to do any work. I just have this little bit of money that I want to put into real estate. I'd rather you do the work. Could you just do the work for me? I'll just give you my money and we can invest together. I'm like, I don't know, these little properties. But then that's what led me to then say, well, is there a way? How can I do this? And that's when one thing led to another. I discovered syndications. And at first, you guys might appreciate this. At first, I thought capital raising was the worst part of the whole thing. I thought, okay, well, let me just do everything else. I can focus on the acquisitions. I know my way around a spreadsheet. I can talk to brokers, but capital raising, I don't want to do that. Somebody else do that part. And I can partner with somebody on that. But fortunately, I had an opportunity early on to be a part of a deal where they convinced me to try it. They said, maybe you just try. You don't have to raise a ton of money. Maybe just bring a couple $100,000 to the deal. And I very reluctantly said yes. And as soon as I started, I loved it. It was the coolest thing ever because it was the perfect mix of what I was doing as a teacher and what I was doing as a designer. And I was educating people on this opportunity that they wouldn't otherwise have access to. And so that was back in early 2018. That's when Julie and I partnered up. And since then, we've done about 40 syndications. We've got thousands of investors, and it's just been a wild, wild ride.
That's an amazing story. Wow. So did you did you join any type of mentorship group or mastermind group?
Everyone.
Everyone.
And we've been part of almost every one of them. And you know what they say, don't reinvent the wheel. Others have done it before you.
Right.
You just, you be a part of it. So we've been part of almost, I think pretty much everyone. I think somebody mentioned Brad Sumrock. We're part of that group. We've been part of Michael Blanc's group, Joe Fairless's group. We've coached with Trevor McGregor, still do, Rod Cleef, so many of the greats in our industry, right? And, from every one of them, we've gotten bits and pieces and nuggets. And what we've been able to do is alchemize that into our own version and our own brand. And that mentorship, I highly, highly recommend it because it's a tough industry, to break into, especially these days with more players getting into it. And so to the extent that you can follow in somebody's path that they've already created, and you can shortcut your time to success. So I attribute a lot of our success to those mentorship programs we were a part of.
That's awesome. And you mentioned that capital raising was kind of like the bug that got you or that you ended up liking so much. So did that become a major part of your business model to specialize and focus on the capital raising side?
It really did. And it was totally unintentional, but looking back, it was the best possible path. And here's why. When you're starting out and you're trying to get into, let's say, the acquisition side, there's a ton of cost involved. You got to fly there, you got to visit, you got to meet with the brokers, schmooze the brokers, and then you've got to spend a lot of time, right? Building out the analyzers, looking at that. Maybe you hire an underwriter. So there's costs associated with that due diligence, the acquisitions, the EMD, all of that. Versus when you're starting out, and as we did, we were just talking to friends and family. In the early days, I would just, I'd hit record and I'd create a quick, I used a tool called BombBomb, and I'd create these quick little, 60-second videos, one-on-one. I'd have my little whiteboard and it'd say, hi, Tim. I'd wave it in the video. And that was it was free, right? We didn't have these huge costs and this huge risk. We were just trying to educate people, tell them about these opportunities. And we got to a certain point where we realized, holy cow, we've got, 500,000 or $1 million in potential money on the table. And that was a very low cost. Julie and I bootstrapped it from the very beginning, and we only each put in a few $1,000s for startup costs. And so what that did was it allowed us a low entry point into this business. And we started to build up this brand and this presence. And we focused on the capital raising side first because it's what we knew and what we loved. And as we started to tip the scales and we were able to bring not just 500K or a million, but now 3, 5, 10 million plus to the table, now we're at a point where we can negotiate more of the deal in these partnerships. And we're at a point where brokers are taking notice because they're like, hey, this group is legit. They've got a great track record. And that's the other thing, was because we were able to be part of multiple deals, we were able to build our track record fairly quickly as well. And so now all of that has put us into a position where we have ongoing capital that we're attracting, which is allowing us to continue to do more and more deals.
That is amazing. In terms of the structure, the legal structure itself, do you mostly go in as a co-GP or do you mostly go in as a fund to fund?
So that has also evolved over time. So in the early days, we were mostly co-GPing deals. And over the last few years, especially as we've hit that 5 million and above threshold, we've had more of a JV structure. And as of last year, we've shifted to more of a fund model, not a fund of funds, but an actual just a multifamily equity fund, where we put multiple assets into a single fund. So that is our current structure, and that's what we're moving forward with.
I see. That's pretty great. Since 2018 and now, what would you estimate as the amount of money that you and Julie have raised?
It's about, so we've currently got an active raise going on as well. So it's about I think about 120, 125 million at this
That's
point.
impressive. That's impressive. A lot of
I got to
people
tell you, just for reference for everybody on the call, the first deal that we raised for in 2018, and this is how fast it can happen. The first deal we raised for in 2018, we raised a grand total of 420K. We thought we were going to hit $1 million at the minimum, but we only hit 420K, which included 100K from me and my mom. So we were struggling then. That was only 5 years ago. And now we're well over 100 million, and we've got the capacity for, endless amounts of capital. And so, I just want to say that it's possible to do within a short amount of time.
That's awesome. So let's talk about that first race. You said you struggled through that first race. So share with us, what were the struggles that you had then?
We had every struggle and we made every mistake. So first of all, this, so Julie and I partnered up, and this was the first opportunity that came across our desk where we were like, okay, this could potentially work. This was in Huntsville, Alabama, which was a market that I was personally investing in as well. So I knew the market very well. And we thought, okay, well, if she could raise, because she was running her own business before we partnered together, she could raise 500K on her own. I could raise 400 or 500K. Surely together, we should be able to raise $1 million. And so that's what we committed to, was being able to raise $1 million. And first of all, it was a lot of new things. That was the big mistake. So these days, when we try to introduce a new thing to our investors, we know that change takes time. And so we try to get way ahead of it and educate on the market or the new asset class or the new operator well ahead of when the opportunity comes out. Or we try to introduce an opportunity that only has one difference. Maybe it's a partner we've worked with before, maybe it's an asset class we've done before, but maybe the market is different. That people can handle. But the problem was, with this deal, everything was different. It was a partner they had never heard of. It was a market that they were not familiar with. And it was an asset class that was new to them. It was a portfolio deal as well. So there were a lot of these characteristics of this deal that we had not taken the time to familiarize our investor base with. And so, as you can imagine, we released the deal, and it was question after question after question, objections, and they just weren't comfortable. They didn't trust in this deal. And so it was fighting an uphill battle from day one. And on top of that, there were actually a lot of GPs in that particular deal, which we've since learned from. When you have too many cooks in the kitchen, it usually doesn't work out well. So we learned a lot on that first deal. And so we've changed a lot of things since then.
Wow. Those are some like golden nuggets just in that short, simple answer. That's really great. So for the folks that's listening to this and they're fairly new to this, maybe this is their first race or so, what would you say are some of the ideal scenarios to come in? Let's say we want to come in as a capital raiser, coach GP onto this deal. What are some of the things we should look for to make our first raise easier? So what type of partner we should look for, what type of deal, and those kind of things?
Well, so what I would recommend is, first, don't start with the deal. If you're looking for the easy path, don't start by thinking about the deal or even the market or anything like that. Start by thinking about your investors. Who are your investors? And the people you already know within your sphere, the people you're already talking to, who are they? And what are they looking for? We always coach our real estate accelerator members on coming up with an investor avatar, figuring out who's your target audience, what are their pain points, and what are their aspirations. Because you've opened up a line of communication with them around real estate investing, and they're still listening, which means there's something that they want, something that you're offering that helps them with a pain point that they have. So figure out what that pain point is. Is it they're trying to replace their income so that they can quit their job? Okay, well, then you're going to be looking for deals with higher cash flow, which I know they're hard to find these days. But anyway, you want to get a sense of what they're looking for. So then you can then go out, and as you're talking with partners and looking at potential deals, you're the matchmaker. You know what your pool of investors wants, and your pool of investors is going to be different from our group of investors. And you know what they're looking for. So then when you talk with potential partners and they say, I have a deal, it's got, no cash flow for the first 2 years, it's a development deal, but there's tons of appreciation on the backside. You're like, well, that's a great opportunity, but unfortunately it's not a match for my investors. So that's what I would say is, if you're looking to make your first raise an quote easy and or successful raise, you've got to know what your investors are looking for, because you're like an ambassador for them. You're like a representative for your investor group. So you've got to know what they want so you can go out in the world and find that thing. And once you find that thing, if you've nailed it, I guarantee when you go back to your investor group, they're going to say, that's exactly what I'm looking for. I'm totally in.
I see. So what would be like the top maybe the top 3 questions to ask to quickly find out what are they looking for? What would be a good fit for them?
So better yet, I think, because I experienced this back when I was working as a creative director. If I ask you a question about what design do you want or what style do you like, you can use words and tell me, but ultimately it's really hard to figure out what's in your head versus what's in my head. So I find that the quickest path to the answer is to give them an example. And it
Mm,
doesn't have to be a full investment summary. We've done even just like you can pull out a Google slide or a PowerPoint slide and just pull a random stock image of the type of asset that you're looking to invest in, plop that on there. And then under that, maybe it's like Class A, built in 2021 in Orlando, Florida, and this many units. And then that's all you really need, right? And then you can, if you want to, you can build out more and say, this would be the projected cash flow, this would be the business plan. But at the very minimum, you have something like that. And then you use that to start the conversation and you say, hey, this is along the lines of the types of opportunities I'm looking at. If I were to find something like this with roughly, let's say, year one cash flow around 4 to 5%, 1.7x equity multiple, IRR around, 14, 15, would you be interested? And that makes it very real for people because
mm.
often people don't know what they want until you show it to them. And then they can tell you, yep, that's what I'm looking for, or nope, that's not what I'm looking for. So I'd recommend that rather than asking those open-ended questions, you take the initiative and create an example, can be super simple, and use that example to then crystallize it for your investors.
Wow, that's really good. I like that. I like the way you approach it. So since that first deal, what give us a deal that you have had a lot of challenges with later, now that you're more established, like a recent deal that you had challenges with raising, and share with us what those challenges might be.
Let's see, more recently. Well, I can tell you last year, well, this may not be along the lines where you're looking for, but last year we launched our first multifamily fund in April of 2022, right before the Fed starts just hiking up the rates. And as soon as that first rate hike hit, everything
Mm,
came to a screeching halt. And what we initially thought, because we had polled our investors, we had given them sample deals, we were pretty sure of how much we were capable of raising. And as soon as the market shifted, all of that came to a screeching halt. And we found that we had to really be creative in thinking about, okay, here are the things, just like in the pandemic, when things first stopped in 2020, we also at that time had to figure out, okay, what are our investors' fears? So same thing at this point, almost a year ago, we had to say, okay, why did everything stop? What are our investors scared of? How can we educate them so they know what's really going on and why there's this opportunity here? And so in that case, and I would argue there's still some of that going on now with some uncertainty in the market
right.
and investors maybe unsure, so all of you on this call, you have an opportunity to step out as a leader during this time. It's like when you're on an airplane, right? And there's turbulence, you don't want the pilot to come on. Oh, well, first of all, you want the pilot to come on and say something. You don't want to hear nothing. That's the worst, right? Is if you're like,
Mm,
the plane's going like this and you hear no news, you're like, we're all gonna die, right? The second worst is if the pilot comes on and they're like, oh my gosh, there's turbulence. Oh my gosh, we've never seen anything like this, right? And then you freak out. What you want is you're experiencing all this turbulence and you're like, oh my gosh, we're gonna die. And then the pilot comes on and he says, folks, this is just routine turbulence. We've seen this before and we're gonna be fine. We're gonna be through it in the next 2 minutes. Just buckle up and sit tight and we'll be back online soon, right? And then that's
mm.
what we have the opportunity now to to step into is that leadership and that initiative is all of us here. You're here, which means you're taking initiative to network and to get ahead of the curve. And so take these conversations and the data and the bits and nuggets that you're gathering and bring those back to your investors, distill that down and tell them, hey guys, it's all going to be fine. Here's where we are in the market. Here's what's coming down the pipe. And here's why right now is the best time. And if you do that, because there are so many other operators out there who are scared to step into that, if you face that fear and you step into that courage and you take that initiative, you are going to have investors who become raving loyal fans. And because you are showing them a path through their fear. And
Mm,
if they then follow you and they take that chance and they invest with you and they see indeed, hey, this was the best time. They're going to trust you for life. And not only that, they're going to start to refer their friends and family over to you too. So I see right now, just like last year, just like at the beginning of the pandemic, is a huge opportunity to step out with that leadership.
I love that. I love that. Yeah, like being the knowledge provider, the ones that brings them clarity, that helps them, yeah, see a bigger view than what the market is saying, right? And so that's really awesome. I love that. When you're looking at your investor profiled avatar, um, w- w- which buckets, I guess, are your most uh your biggest group of investors? Are they tech people from the Bay Area? Are they entrepreneurs, business owners? Like, give us an sort of an
Mhm.
insight into your investors.
Happy to. Yeah. And when Julie and I first partnered together, we had a very specific avatar in mind, and that was moms. We named our
Mm,
avatar Jen. She's 38 years old. She's got 3 kids. She's got a golden doodle. She lives in the Pack Heights neighborhood in San Francisco. We know everything about Jen. And as we've built our team knows everything about Jen too.
mm,
And in the early days, we targeted everything toward Jen. And what that does for anybody here who may not yet have an investor avatar, the value of having an investor avatar is that you find yourself in the early days so often sitting in front of a blank screen. You know, you need to write that newsletter. You know, you need to create that blog post or that video or whatever it is. And if you don't have an investor avatar, you're trying to reach everybody. It's impossible. You're going to sit there and you're going to write one sentence and you're going to be like, no, that's not right. Delete, delete, delete. And you're going to say, well, maybe I should talk about this. Okay. Let's start. Nope,
mm,
that's not right either. You're going to spin your wheels because I've been there. I've done that for hours and hours, and it's the worst because you're just stuck. And when you have an avatar, what that does is now you're sitting down and you're like, Jen, what are the questions Jen has? Okay, Jen's
mm,
wondering, she's busy with laundry. She wants to hear something while she's folding her laundry. Okay, how can I create a podcast or a quick video for her? Okay, and what would I teach her? Well, she doesn't really know how the whole process works. So, okay, let me see if I can just teach her real quick how this process differs from a rental property or from something else she's more familiar with. And so it gives you a really easy way to start to get what's in here, which is the gold, out into being able to teach people. And so early on, Jen was our avatar. A couple years ago, we realized that we created a Jen 2.0 because she evolved with us. She
mm,
became a savvier investor because she was reading our blog post, she was watching the videos, and she knew what a cap rate was. She knew how to vet a market. And so she was a little bit savvier. And then most recently, within the last year, we've discovered we have not just Jen and Jen 2.0, but we also now have Bill and Richard. So
mm,
Bill is a business owner and he's looking to get his business kind of um, operating on its own so he can then focus on investing. And Richard is a retiree. He's made his millions. Now it's about capital preservation. And so we've realized that even though, isn't that funny, even though our messaging was all targeted toward Gen and then Gen 2.0, we just naturally attracted all these other avatars. And people ask us that all the time is, well, are all your investors women? Because Jen is a woman. But no, we never say women only. We don't take men here. It's just that helps to our brand to have a personality, and it helps our brand to be more cohesive. And so starting from day one, our investors were 50-50, male and female. And they continue to be. We attract a lot of physicians, we attract a lot of moms too, and now retirees and business owners. And so that's in a nutshell who our core audience is, and also the value of having that investor avatar.
Wow. Okay. So would you recommend that everyone starting out to focus on just one avatar and then let it naturally grow like the way you have it, and not try to focus on 3 different avatars?
That would be my recommendation, because it can be difficult juggling multiple types of personalities and what they're looking for.
Right.
So I would recommend starting with one. If you don't know who that person is, often you can look in the mirror. Most often, people's first avatar is who they are, because you know yourself the best. You don't have to do user research to figure out what your pain points are. You already know them. And so that's the easiest place to start. Outside of that, look to the people who you're already talking to about these opportunities. See if there's any common threads. It doesn't have to be gender, doesn't have to be age. It could be maybe they're all looking to quit their jobs. Maybe they're all looking to start a business or a side hustle, or maybe they're all looking for cash flow. Whatever that is, those can be your characteristic traits. But yes, I would recommend starting with one. It's hard enough with one. So just start with one. And then as you get success with that, then start to think about branching out.
I love that. So once you find your avatar, you decide on this one avatar, how can you best market to them?
All right, here's what you do. It's super simple. Sit down, set a timer. Let's give you no more than 10 minutes. Okay, let's say we set a timer for 10 minutes. Thinking about that person, jot down as many questions as that person might have about these opportunities. All of the questions you think this person currently has in their brain that's keeping them from moving forward and investing with you. When the timer goes off, you've got a list. At least, even if you get off to a slow start and you, at the end of 10 minutes, you only have 10 questions, that's 10 great pieces of content that you could create, right? So that's the first step, is think about all the things that this person needs to hear from you we always talk about it like a bridge. They're over here, and where they may not know a lot about syndications or multifamily or how this whole world works, they need to get over here where they're savvy, they understand how this works, they trust you, and your job is to build the bridge in between. And this list of potential content, that's the first step. That's going to tell you how to build that bridge. Then you start with that first one and you say, okay, this person at a high level, they don't even know why multifamily. Why should I invest in multifamily versus self-storage or stock or whatever else they're investing in? Okay, let me knock that first one off the list. Let me create whatever your strong suit is or you're most comfortable with. If you want to create videos, blog posts, write an email, whatever it is. I find, in fact, if you struggle with writing blog posts, instead of trying to write a blog post, open up an email. And just right there in Gmail or Outlook or wherever you type your emails, just pretend like you're writing an email to this person. Dear Jen, this is a great question that you asked about why invest in multifamily. I think about this question all the time. And when I first started investing, this is what I struggled with. And here's how I figured out the answer. Because we're all used to writing dozens, if not hundreds of emails every day. You already do that really, really well. So start there. And even if you do a video, you can take that and then read that. That becomes a script for a video. So I find that taking it out of this, like, oh my gosh, I have to create a piece of marketing. I don't know. I'm not a marketer. I can't do it. Just write an email. And then that'll get it out of your head. Then you go back and you say, okay, well, maybe I make this part a little bit more formal, or maybe I change this story and I add this part in instead. And often you can take that email and just plop it onto your website, and that becomes a blog post. And again, you can put that in multiple places, Tim, as you're doing now, right? We've got this live streaming, we've got people in Zoom, this is going to be a podcast, right? So we call that spider webbing. You take one piece of content, you spider web it out into all these different places. And so you're minimizing your work, but you're maximizing your presence. And so that's where I would start. Make that list of what your avatar wants to hear about, and then start writing those emails and turning those emails into pieces of content.
That's really great. Yeah, I love that, because I know I would struggle if you tell me to sit down and write an article. Forget it.
Yeah.
Like, I
Yeah.
won't do it. But framing it as writing an email. Oh, I can do that. That's easy,
Yeah,
right?
that's right. Right. Yeah.
Yeah, I love that. And then in terms of so that's from the content perspective and attracting them. What's another good way to kind of go find where they're hanging out at, that you can then connect with them and further that relationship?
That's gold right there, what you said. Where are they currently hanging out? And so here's the thing is, a lot of people say, well, I've got to build my brand. I've got to build my website, and I got to point everybody to come back here, come to my website, right? And that's hard. There's so much noise out there, and it's going to be really hard for you to put up this billboard and suddenly everybody comes to you. Thinking about the user experience, what you want to do is go to them. So once you've got your version of Jen, part of that should be, where does Jen currently hang out? Does she go to in-person meetups? Online, where is she hanging out? Is she part of Facebook groups? Is she on Instagram? Is she on TikTok? Where is she online? Where can you find her? And for us, Jen, as a mom, was hanging out back in 2018 anyway. She was in a lot of these moms' Facebook groups, the ones where you ask everything from how do I save for my kids' college to, oh my gosh, my baby has a rash. And what is this thing? Those types of moms groups, right? And so we said, well, Jen's hanging out there. She may not be the one talking about investing, but we know she's here. Now, how can we insert ourselves into that conversation and provide value, not advertise and say, come to us, but really be of service? And so one of the things that we did that was super helpful in the early days was we would go into these moms' Facebook groups and we would think of topics that were not directly tied to real estate, but getting at that same pain point of building wealth, creating cash flow. And so we were thinking, well, moms, they're thinking about saving for their kids' college. And so we would go into these moms' Facebook groups, and they have a search bar, and we would just type things like 529 plans, because that's commonly what a lot of parents think about when they think about saving for college. And so lo and behold, there would be these threads, sometimes from, 18 months ago, even many years ago, talking about saving for college. But the beauty of Facebook groups is, as soon as you comment, it brings that thread right back to the top. Yep. And so we would find these threads where people were saying, hey, how should I save for my kids' college? And most people were saying 529 plan, that's what I do, or I put in a savings account. And we would come in and we'd say, well, here's what we're doing. It's a little bit different from everybody here, but here's what we're trying, and here's how it's working. If you want more information, feel free to message me directly. And we'd post things like that, and our inbox would just blow up. people would be like, oh my gosh, I've never heard of this strategy before. Tell me how this works. And we'd have all these one-on-one conversations. And in fact, one of our biggest investors to date came through that exact strategy. She
Wow.
was she had just had an inheritance over $1 million she didn't know what to do with. And she didn't know us from anybody, but she saw us have a presence in this Facebook group and talking about this alternative way of investing. And after a little while, she reached out and she said, well, hey, can I just learn a little bit more? She didn't tell us anything about her inheritance at that point, which smart for her. She was just like, I'm just curious. And so we established a relationship. And over time, she and her husband have now invested in over 15 deals with us,
Wow.
well over $1 million, all from a Facebook conversation. So this is a very powerful strategy.
It really is. I don't know if the people listening realize like how big of this idea is. I was just thinking, okay, that's it. We can end the show. We can go, we can all go home now. This is so good. I love it. I mean, this is such a
And the
stealth
key,
strategy. Yeah.
yes, it's stealth because you go where, Wayne Gretzky said, you got to skate to where the puck is going, right? You got to figure out where these people are, where they already hang out. You got to go there. That's how you're going to find your success. You got to figure out what they're already talking about and figure out how to insert yourself into that conversation. If you try to force yourselves on them, you're not going to have any success. So that's why it's key that you know who your investor avatar is so you can do these stealth strategies just like this.
Right. This is so good. All right. It's so good. I have to ask you for one more. Give us one more
Yeah, let's do it.
around this marketing side of it. Like one more good
All
idea.
right. Okay. Well, one more. I'll give you one. The one that's coming top of mind right now is around accountability, because all these ideas are great. And we could sit here talking all day about this marketing idea. This is so great. You're taking all these notes, right? And then tomorrow comes and you're like, I don't know if I could do that. Just, let me go do something else, right? And then it just days go by and it doesn't happen. So here's what we did back in the day. We said we wanted to commit and we saw the potential, we saw the opportunity, and we said, okay, how can we hold our own feet to the fire? And so what we did was we announced this publicly to all our friends and family that we were going to put out a weekly newsletter. Now, this is a little nuts. So this is only not for the faint of heart, but that's what we did. We said, we're going to put out a weekly newsletter. And not only that, every newsletter is going to have at least one brand new, fresh piece of content for our investors, which means every month we were putting out at least 4 new pieces of content. And that allowed us to then build our vault of content very quickly. Over the course of a year, we had dozens, if not hundreds, of pieces of content. And that's what helped us to build that investor base. And I love what writer Shonda Rhimes says. She says, writing for TV is like laying track for an oncoming train. And that's what our newsletter was to us. It kept us accountable because we knew ride or die, that newsletter was going to go out every Tuesday. And whatever we had to do, bend over backwards, whatever else we had going on, that newsletter was going to go out. And darn it, it was going to have a new piece of content in it. So we had to figure out how to make that happen. And so that was our oncoming train. And because of that, because we committed to that, and we said, this business is all about trust. We held our feet to the fire. We committed to this. We have to keep this on track. And so because of that, that's a huge part of why we've been able to build our presence and our brand to this point, because we got so much practice with building the content, and we knew exactly what our investors were looking for because we kept putting out that content. So whatever that is for you, doesn't have to be a weekly newsletter, can be, you commit to, once a month putting something on YouTube, or daily posting in a Facebook group or something like that. Whatever it is, I challenge you just to commit to one thing. Don't try to do it all because you're going to get overwhelmed very quickly, but just pick one thing and commit to that. And from there, once you've got a handle on that, then start to expand from there.
That's perfect. You actually answer my next question without me asking it, which is about building
Perfect.
trust and authority. So that was a perfect answer. Wow. And with Chat GPT being popular these days, it can help a lot with writing some of these articles. So yeah,
Yeah.
I love that. And then I know you mentioned newsletter was a big one for you. Do you also do physical mail out at all, or just they're all digital?
Yeah, we haven't. I know there are a number of groups who do. We haven't expanded to that yet. We're finding pretty good traction just with our online presence.
That's great. Yeah, I know. I received Joe Fellis's newsletter, and it does keep him
Mhm.
top of mind for me for sure. It's like, oh, it's here again.
Yes,
Yeah,
that's right. That's
it's
right.
that's really cool. And then what are some of your favorite tools that you use in your business?
Oh my goodness. Okay, so we've got all the regular ones, right? Google, Slack, YouTube, like all these things. But let me dig deeper and think of some things that you all may not know of. So on the design side, when you're creating things for your, like the images for your blog posts and whatnot, or finding images for your website, there is a great free stock image site called unsplash.com. Here, maybe I can put these into the chat for anybody here. Unsplash.com is a great one. So that one I use, almost all of the photos from our site come from there. And as a creative director, I have a high bar when it comes to imagery. So that's a great one. Another one, if you're looking for color palettes for your website, is colorhunt.co. I use that all the time. And we use that as we put out new deals as well. Google Slides, believe it or not. So I think somebody mentioned Canva. So Canva is great. And if you don't want to, if you're not a designer and you don't want to learn a new tool, I find that actually Google Slides and PowerPoint are great design tools, and they can do most of the things that you need. I've built and designed whole websites, believe it or not, inside Google Slides. So they are powerful design tools, and you don't necessarily need to venture off into other tools for that. Let's see, for investor polls, which are huge, you always want to know what your investors are looking for, what they want to invest in. We've used Google Forms in the past. That's a great, simple tool to use. We've also used a tool called Survey Sparrow, which allows you to create more fun, custom, more interactive surveys. For our CRM, we use ActiveCampaign. That one I couldn't recommend more highly. It's to get you off the ground with investor communications, and especially with automations. It's a really good tool, easy to use, easy to learn, and really powerful. Beyond that, let me think. If you're using WordPress, so early on, we built our website using Wix because we were just intimidated. We didn't know how to build a website. And Wix, like Squarespace, is very like drag and drop, right? And WordPress tends to be a little bit harder to learn. But over time, WordPress is more SEO friendly, and it's also more powerful because it's got all these plugins. So there's a plugin for WordPress called Elementor. that does turn it into more of a drag and drop website builder. Um, there's so many more, but those are, the initial ones that come to mind. Through our Real Estate Accelerator program, we share all of our tools that we use. Oh, one more. I got to share one more with you. If you're creating videos, you've got to get an app called Big VU. It is a teleprompter app, and it is so cool. Oh my gosh, this changed my life, because I see somebody said, I love Big View. I love it too. In the early days, I used to try to create videos with just a bullet pointed list, and I would hit record. I messed up, hit stop, hit record, stop, over and over again. And what Big VU allows you to do is take a script, something you write, and turn it into a script. And what it does is you hit record right within the app, and the script starts to scroll up on your screen. And all you have to do is just read. And because the script is really close to your camera, it looks like you're looking directly in the camera. So you can often get it in one take. So that's another really good tool as well.
That's great. You are such a incredible resource of information and resources. This has been one of the most informative interviews I've done, because of the way you answer and the way you expand on your answers. I love it. Thank you so much.
Well, good. I'm so glad to provide some value. I just want all of you to know, I've been in your shoes. I know how hard it can be. I know how overwhelming it can be. And, it's hard, there's so much out there. It's hard to know what to do, when to do it. And so that's why we open up our entire business. Everything in the back end of our business, we share with all of our coaching members. And if whether you guys decide to join or not, that's not, you don't need to, but know that I'm here as a resource, because I want you to know that, you can succeed in this business. And it's a wonderful business. It makes huge impact. And if there's anything that I can do to help any of you, I'm always here, happy to share anything that we talked about today or anything else.
That's great. Now I want to talk about where you see the market is going, and then also too, I know you started your funds last year, right? And so, are you still moving forward with the fund model in this changing market? And do you see that as a advantage or disadvantage versus syndication with where the market's going? So if you can share some of your insights into that.
We actually just launched our second multifamily fund in December. So we are continuing to move forward with the fund model. And so this one is similar. It's a multifamily equity fund, and it'll hold probably 2 to 4 or 5 assets in it, depending on the sizes. We've got our target markets and whatnot. And I think it's a terrific model. It's not for the faint of heart, and it can be difficult starting out with a fund model, because here's why. Is when you're launching a fund, people are investing in you because you are making the choices and you are going out and finding those assets. Whereas when you do a syndication, you launch a specific asset or a specific deal, then they're vetting that deal. You are a part of that, but the onus is on the deal to perform. And so it can be a shift. And so that's why we've built our track record, and now we're switching to this model. But what that allows us to do as our business grows is now we have that capital more at the ready. We're not behind the 8 ball, we're in front of it. And so we've got that capital at the ready, which then allows us to go out to more brokers and know exactly what we can offer and what we're looking for in that fund. And so, people are always hesitant to jump in on the first of anything. But the second fund, because we've already got that first one and that's doing well, the second one is already it's already got really great traction and momentum, and we're about to announce the first asset in the fund. So it's all going actually really well. And in fact,
Mhm.
before we haven't even announced the first asset in the fund. This is basically a shell of a fund that we've
Wow.
announced. We've said, here are the things that we're looking to buy, and here's the markets that we are looking to buy in. And just from that, because of our track record, because of the trust that we've built over time, we've got millions of dollars
Mm.
in the bank for
Wow.
people waiting to invest with us, just because they have that trust with us. They don't even need to know what the asset is. And that's what I want all of you to know is possible. If you put in the work to build that trust, then eventually doesn't matter what you're going to invest in. They're going to follow you anywhere that you go.
That's awesome. How much was your previous fund? How much is this fund that you
So the
just
previous
launched?
fund was 30 million, and this one is around that same range as
Okay,
well.
gotcha. And so I guess I assume you having the fund. I guess let me take that back. Where do you see this market going? Yeah, where do you see this market going?
That's the $1 million question. I see a ton of opportunity. Honestly, I see a ton of opportunity ahead. 18 months ago, seller expectations were here and the market was starting to shift. And you know how sellers are. They're like, no, I still want, let's say it's, 50 million. I still want that 50 million you said I could get 2 months ago. And buyers are like, I don't know, the market is softened. I don't know. I'll give you, 40, 45. And they're like, no, I want 50. And they're like, nope, 45. I'm going to walk away. And the seller's like, no, I'm going to hold out for 50. And then a few months later, as the market continues to go, right, then sellers are like, okay, I'll take that 45. I'll take that 45. Come back. I'll take that 45. And you're like, no. Now I'm at 40. And they're like, what? You said 45. And you're like, well, that was 2 months ago. And so that's what's been happening, right? Over the last 12 to 18 months, that's the slide that's been happening. And sellers are having to wake up to that. And the perfect example of that is this asset that we are going to announce soon. It was under contract at 70 million. It fell out, and I think we're getting it for 57 million. Within a
Wow.
short period of time, right? And
Wow.
that's what's happening across the board. There's all these opportunities starting to pop up. They're not all over the place yet, but I very much believe that they will be running rampant here within the next 12 to 18 months as seller expectations come in line. And so all that to say, this is the perfect opportunity to get your investors ready. And investors aren't sitting on the sidelines. In fact, as I mentioned, we put out this fund. Investors are coming. They're
Mhm.
ready to invest because they see inflation. That's what's going on in their minds. They're like, I need to put my money somewhere. It's losing value. And so this is the perfect opportunity, because these opportunities are coming down the pipeline. Investors are wanting to invest. So everybody here, you have the opportunity to step out, as we talked about earlier, into that leadership. Let people know this is what's coming, and this is the opportunity that you have. And I'm going to lead you in that way. And I'm going to find these great opportunities for you. Come with me. I
I like
invite you to
that.
come with me. And so that's where I see things headed. And we're working hard to position ourselves behind the scenes to make sure that we are ready for that opportunity when it comes.
That's great. So with you have already reached, over $1 billion worth of assets and over $100 million that you raised. What's yours yours as in good eggs, big goal? Where are you wanting to take this business?
Oh, wow. So recently, we did. So if I highly recommend, there's a book by Cameron Herold called Vivid Vision. Highly recommend. It's a short little book. You can read it on a quick plane ride. And the concept of a vivid vision is you look 3 years out in your business and or in your personal life, and you come up with a very clear vision of what your business is going to look like in that time. So we recently did this. And in fact, we had all of our team members do it at our recent team retreat too. We had them do it for their personal lives as well. Write a letter to yourself 3 years in the future about all the things you're proud to have accomplished at that point in your life. And people shared and they were tearing up, they were crying because it's amazing what you can accomplish and the pride that you can take in that. So as we thought about 3 years in the future for Good Egg, we've done a great job so far of speaking to and providing opportunities for Gen and Gen 2.0. And we're starting to branch out into our other newer avatars, Bill and Richard. But we see that so far we've provided great deal flow, but we always talk about life by design. That's the ultimate where we want to get them to. Yes, real estate is great, but it's a stepping stone to get you to this life, this amazing life that you can build for yourself and your family. And so what we're going to be doing between now and then is building out all those things. We want to build out not just deal flow, but investor retreats, life by design summits, investor masterminds, financial literacy for kids. So all these programs where we're taking into account the full investor, not just how much are you putting into this next deal that we're opening up? And we're also looking at expanding our impact. Something that we were able to do within the last couple of years is starting to donate a portion of our proceeds to a nonprofit that's important to our investors. So we poll all our investors to see what they're passionate about. And with every deal that we close, we donate a portion of those proceeds to one of those causes. And so over the next 3 years, we are also looking at creating the Good Egg Foundation and expanding that impact there as well. So lots moving and shaking.
I love it. I love it. So yeah, so I mean, for the people listening and they want to connect with you, partner with you, invest with you, learn from you, get access to all these great things that you guys are doing, where would you like to send them?
The best place to go especially if you are wanting to get some capital raising support, is our website, therealestateaccelerator.com. That's our coaching and mentorship program. I mentioned earlier, basically we open up our kimono essentially, and we've taken everything in the back end of our business that's worked for raising capital. We've white labeled it and we give it to you, including now over 80 blog posts that you can copy and paste. So you don't even have to write all those emails and turn them into blog posts. You can just copy and paste, add a little snippet to the beginning and the end, and boom, you've got an instant thought leadership platform. And yes, I will put the link in the chat as well here for anybody here. But yeah, through that, you can apply and feel free. You can reach out to me at any time at Annie@goodegginvestments.com. You can also learn more about our business, Good Egg Investments, at our website, goodegginvestments.com.
I love it. Awesome. Thank you so much for that. One last question for you. What are you teaching your kids that perhaps most parents are not teaching this? Because I have two teenagers.
Yeah. I'm so glad you're asking this question. This is one of my favorite questions to ask others as well, because, we're in such a unique position to be able to pay it forward and shape the next generation. And I think, oh my gosh, just all these conversations around entrepreneurship, helping them to think about entrepreneurship in a new way. Before COVID, one of the most powerful things I did with my kids was help them to set up a lemonade stand. And now let me tell you, the most powerful part of this was we had the lemonade stand, and within 2 hours or so, it was a high trafficked area. They had about $200 that they had made. from lemonade. And I'm like, whoa, I need to switch my business. Anyway, so they had $200. So we get home, we pile it all up on the kitchen table, and they're thinking, oh my gosh, I'm rich. Like I could just, oh my gosh, I quit everything and just do this. And they're starting to make a grab for the money, right? I've got two young boys. They're just like, oh yeah, thinking about all of the Legos they could buy. I'm like, wait. Remember, I bought that jug that held the lemonade. That was $40. Let me take my $40 back. What about the cups? We paid for the cup. Let me take that. And the napkins, right? And we're slowly, they're watching the piles of cash go down, and they're like, what's happening? And we had a frank conversation about startup costs and what that means. And when you start a business, that's an investment. But next time, guess what? You don't have all these same startup costs, and you get to keep more. And so I think it's in little ways like that where you can show them with real life examples. I have a good friend, Adam Carroll, who did an exercise with his kids, teenagers. He went to the bank, and he actually, we all know Monopoly. He actually got the same denominations as Monopoly has in their play money in real money. He got like however many, like 100 ones and 55s, whatever it is. And he had his kids play Monopoly with real cash. And he found that the decisions that they were making with real cash was starkly different from with play money. So to the extent that we can give our kids these opportunities to test things out and to make mistakes while they're, living under our roof, and while we can be there for them, I think that's going to make the difference as they go out in the world.
Wow, I love that. That's really awesome. Annie, thank you so much for doing this interview with me today. It's been phenomenal. I love it. It's one of my favorite interviews. You've been so generously sharing and giving, your knowledge, and really appreciate you for doing this interview with me today.
Oh, right back at you. And thank you to all the listeners, everybody here in the session live as well. It makes my heart so happy to be able to share with you. These are hard-won things that we've learned and tested through time. And I want nothing more to share it with all of you so that you can see success too, because I fully believe a rising tide lifts all boats, and we're all in this together. So again, if there's anything I can do to help you with your business, or even connect you with anybody in this space, feel free to reach out anytime.